Alright, what's happening, guys? I hope you had a good break over the New Year period. Welcome to your very first episode of Sensible Investing of 2020. My name is Jesse, and as we covered before the Christmas break, today we're going to be continuing to look at part 2 of my 2 favorite dividend stocks for 2020 and why I believe that they're set for a re-rate of about a 50 to 60% within the next 12 months and collecting a nice 10% plus dividend yield as we go. And carrying on from last time in the previous episode, what we did was we covered why these 2 stocks dropped about 50 to 60% in the space of the last sort of 6 months, and why I believe that the drop is unjustified, because as we covered in the previous video, with America's recidivism rates at all-time highs and its incarceration rates near or at all-time highs, with the prisons largely still over capacity, we covered the first reason why I think the sell-off was unjustified. And so today what we're going to do is we're going to cover the other reasons why I believe that the sell-off is unjustified. We're going to cover the fair value, when I think it's going to re-rate 50 to 60%, and some of the different risks, and then the conclusion to the video. So before we get into it, guys, I just wanted to point out, so as you can see, we covered in the previous video, and late in 2018 in December, as I mentioned, there were 2 major catalysts going for CoreCivic and Geo. One was the fact that, the immigration and customs were going to increase the use of these facilities due to their crackdown on immigration. And as you can see here, they signed a new 15-year contract with the ICE. And then I also talked about the US Marshals going to do the same thing, right? So that's going to be another need for continual use and more use of these 2 companies' facilities. And as you can see over here, they've now signed an almost 9-year new contract with the US Marshals. So again, guys, really just carrying on from what I talked about in the last video, lots of demand, lots of need, and there's going to be a good catalyst for these guys as we continue into the future. Alright, guys, so moving on. Now, the next reason why these stocks got sold off 50 to 60% in 2018 was because of not a debt issue, but a fear that they wouldn't be able to refinance their debt. Alright, guys, so as you know, look, REITs, they finance big property investments, right? So what they do is they take money, they invest it into properties, and then they continually cycle debt in order to give you a good return from whatever it is that they do in terms of their operating activities. Now, as you may recall from the last video, the politicians, in particular the Democratic Party, were pressuring the lenders of these 2 REITs in order to stop lending to them, to cut off their supply chain of funding. Now, for Geo Group, that's actually not too much of a problem, because as you can see, their next major debt maturity isn't until 2024, and their other debt maturities are well covered by operating cash flows, okay? So that's not a problem. But for CoreCivic, that's a little bit problematic, because they had a debt amount maturing within about 12 months, and what happened was the major lenders like Wells Fargo, SunTrust, Bank of America, they withdrew their funding, right? And they said, look, we're not going to renew this line of credit for you. And so as a result, they dropped quite a bit in share price, and there was a bit of panic in the market. Although the company itself, they weren't really panicking. In fact, they were very calm. And the reason being is because they have a lot of different options, right? Because as you can see here, Moodys assigns them as a credit rating of B+, and they have plenty of international lenders and banks to turn to. And as you can see on the date over here, 11th of December, and then about 7-8 days later, they then secured a new loan with the international bank, and then they managed to refinance their upcoming debt maturity obligation. So as you can see here, within the space of listing the credit, and then 7 days later, they managed to refinance it, no problems, right? So not a worry, and again, the other reason for a sell-off, not justified. Furthermore, if we look at the private debt market, you'll actually see that quite a bit of CoreCivic's upcoming projects and financing is being taken care of by private money, okay, guys? And this is something really important that we should pay attention to, because there are some shifting tides in terms of equity, right? In terms of funding, in terms of liquidity in the market. And no longer is it, the massive institutions. I mean, they still have a lot of money, but it's not as like it was before because they've been underperforming the market for so many years that, private money is now seeking a different avenue, right? And also the yields and the bonds and the government bonds are so low that private money is seeking more outlandish investments like your, CoreCivics and other investments of the likes. And this is quite evident in an article that I was reading, and it was really, really interesting, okay, guys? So if you have a chance, have a check out of this article, right? At the moment, there's about $780 billion, and they're forecasting that the private liquidity market increase to well over $1 trillion in the coming years. And the reason why that's interesting is because, as you can see here, you've got these young, rich millennials in their 30s and 40s, right, who invest a little bit differently and think a little bit differently to their previous generations. And the number of families with wealth coming onto the private debt market is increasing because, as you know, right, negative rates in Europe, very, very low yields in the States, and in most of the modern world, right, negative or near negative yields in the likes of Japan and your other countries. And this is causing a lot of money to shift away from many traditional investments some years ago into the more outlandish investments that you see today, right? So there's a flow of money away from traditional assets into your sort of more out there assets like your CoreCivics and Geos. So this is a good thing for the two companies. And so again, that's a reason why, as you can see here, it's not really a problem that the major institutional banks have withdrawn their funding because they can just tap the international banks or the private debt market. And there's plenty of money happy, right, to help fund them because they're seeking a high return. And at these prices, these two companies have very, very attractive yields. Okay, guys, so as covered in the previous video, the other reason that the two stocks sold off was because the politicians, in particular the Democratic Party and the candidates, have pressured the sell-side analysts on Wall Street and some of the ETFs like Vanguard to stop coverage of CoreCivic and Geo Group, right? So stop coverage, and that means there's no price discovery, and then there's less sort of attention or publicity on the two companies, okay, guys? And then they've also pressured the Vanguard Group to kick Geo Group and CoreCivic, among other things like tobacco stocks, gambling stocks. They're only of 3% of stocks that don't have any sell-side coverage and are excluded from sort of major ETFs like the Vanguard ETFs, okay? Now, that's not a problem for me because, as you guys can see, again, I think that this has been wrongly sold off because if we look towards what's highlighted in red in the circles there, what's interesting is that the sell-side coverage, that ceased back in early August, yeah? But the volume of trading for the two companies have actually increased, and as you can see, for Geo Group, it's more like 150% more, whereas if you look at CoreCivic, it's more like 200% more. Okay, so it's actually had the opposite effect that Democratic politicians were intending, whereby they're trying to cut off coverage, but then because they've made such a big deal out of banning private prisons, that's actually given them a lot of free publicity, and as a result, as you can see, I think that's why the sort of volume of trading has actually increased, because they've dropped 50 to 60%. They now have really, really attractive dividend yields, and investors like you and I, right, because of the internet, we can find things very easily without needing Wall Street's help, just like I'm sure the way that you found this investing channel or some of the other stocks that you've found, okay? You'll actually see that the trend for Geo Group and CoreCivic, they've been, relatively stable and relatively steady, but with CoreCivic, you can actually see that it's not only staying steady, but it's actually increasing over time, okay, guys? And the reason why that is because, look, the bigger deal that you make of something, even if it's negative publicity, that is still helpful to create awareness, okay? So that's what they're not understanding. Also, if we actually have a look at the ETFs that have excluded CoreCivic and Geo Group, you'll actually see that, these are relatively unknown and unfollowed ETFs, okay? And you can say, well, look, Robinhood and Seeking Alpha, it's not exactly the accurate thing we can go by, but I think it's, the most accurate thing that we have in terms of understanding what investors hold when you compare it with other stocks and other ETFs, like the weed ETF, for example. Okay, guys. So look, I don't think it's a big deal at all. Sort of 90-something followers on Seeking Alpha, 100-odd followers on Robinhood. Not a big loss, not a big deal. These aren't really popular ETFs, and so again, not a good reason to sell the stock off because Vanguard has excluded them from the ETF. Okay, guys. As in the famous words of P.T. Barnum, there is no such thing as bad publicity, because bad publicity just creates awareness, and this has been such a major issue for the Democratic Party campaigning that it's had the opposite effect, and it's actually helped the likes of Geo and CoreCivic. Okay, guys, so now that we've covered the fact that, the reasons why the stocks have got sold off were the wrong reasons, and in fact the companies are doing very well, I wanted to quickly take you through management's outlook to get their view on things, okay? And so what I wanted to do is I wanted us to have a look at some of the following, okay? Now, based on my research, management is very, very bullish and very, very positive, whether, whoever wins the election under whatever party that runs the show, okay, guys? And the reason for their positivity is if you have a look at their retention rates, okay? So this over here is CoreCivic's retention rates, okay? You get a minimum retention rate of about 90%, high 80s to high 90s%. But also, if we have a look at the number of contracts won versus the number of contracts lost, you'll see that net, they're still winning more contracts per year than they are losing, and in some years by quite a margin, okay, guys? So this is this again really reinforces the fact that there is increasing demand for their services and an increasing need. And also, if we have a look at the same for Geo Groups, okay, even higher retention rates than CoreCivic, and again, winning and extending quite a lot of different contracts. And these two contracts don't actually include the two most recently won in late December, which is the ICE contract and the U.S. Marshals contract, okay, guys? And most of these contracts are, we're talking 5, 6, 10, 15-year contracts with extensions. So these aren't short contracts, and once they get signed, they just sort of carry on and generate recurring revenue every year, okay, guys? So obviously, management is quite bullish, and if there wasn't a demand for their services, they wouldn't really be winning this much business. So again, another reason why the sell-off isn't justified. Also, if we have a look at their comments, okay, if we have a look at their comments on their different earnings calls, especially what is highlighted in yellow, you'll see that the tone is largely positive and very bullish. They're increasing their guidance quite a lot, right? So they're increasing their guidance. They're lifting their revenue and EBITDA guidance, for the year. They're lifting their FFO, funds from operations. And the same can be said for Geo, right? So because of increasing demand, they're citing positive demand. So it's just a general sort of tone of positivity and bullishness, which isn't really reflective of the view that Wall Street has cast on these two stocks, okay? And so what I wanted to take you through is I wanted to quickly talk you through what I see as some of the risks of investing in the stocks, but still provide a good sort of margin of safety, okay? And the first risk, which is the worst case scenario, as discussed on their earnings calls, is that, let's say if, unlikely, but for whatever reason, there is a total, complete ban on private prisons in the US, okay? Now, what's going to happen is they've got two options. They can either sell these properties or lease these properties. Now, let's say worst case scenario, the government says, well, we don't want to have private prisons and we don't want to lease these properties from you, then we're going to have to obviously buy from you, okay? Now, based on my research, the average bed will cost you $100,000 to $200,000, but for the sake of conservatism, we're going to use $100,000. And the reason being is because Alabama had released an RFP for about $1 billion for about 10,000 beds, okay, guys? So if we work that out, it's about $100,000 per bed, okay? And this is being very, very, very conservative because, for some areas it might be different, right? So for example, Alabama might be cheaper than maybe Texas, okay? But for the sake of conservatism, we're going to use $100,000 per bed, and we're going to calculate it based on the number of beds that both Geo Group and CoreCivic owns. Now, as you guys can see here, based on that, taking away their long-term debt liabilities, you'll actually see that, okay, Geo is a little bit overvalued and CoreCivic is very undervalued. But again, guys, that's the very, very conservative calculation of $100,000 per bed to build from scratch, and from Alabama, okay? And like I said, value of property could be very different in different states. This doesn't include their cash, this doesn't include their equities, receivables, nothing, okay? This is a pure all liabilities minus beds. So I think that there's quite a bit of margin of safety in this. And also, if let's say, a state or many states want to try and ban private prisons, they're still going to have to try and get past the supremacy clause, which is the fact that, federal level law always trumps state law, okay, guys? And it actually has to get written into the Constitution. Now, that's definitely a lot easier said than done, guys, okay? So, it's not just one politician that says, okay, cool, I'm going to try and ban private prisons, and, we're just going to cease use of that. I mean, have a look at what happened with Obama, okay? You had Yates and Obama, and they were both very, very anti-private prisons. In fact, Yates was the previous Deputy Attorney General, and she had actually said, look, we're going to just ban it from a federal level, and the very next day, the Bureau of Prisons renewed the contract, okay, guys? And the reason being is because it's a lot of lip service, right? Recidivism rates are at all-time highs. Overcrowding is a massive issue. How are they going to write this into Constitution? It's improbable, right? Okay, guys, it's just lip service. And if you look at the law over here, you can see that there are a lot of loopholes and a lot of sort of other conditions that can get around the actual law. For example, if we take California, California's most recent AB 32 bill, and also, in the bill they said they want to outlaw it by 2028. Well, anything can happen in 8 years, and it really just shows you how long it might actually take somebody to get to the level where they won't have to rely on these. Okay, guys, so now that we've got that out of the way, what I really wanted to talk about is the, now over here it says recovery, but what I mean by that is what's going to cause the share price to recover, which we covered, but more importantly, when, okay? And as I talked about at the beginning of this video, I think it's within the next 12 months, and I think it has a lot to do with this chap over here, okay, guys? Now, what I mean by that is, we've got people say, well, the guy's impeached, he's going to get removed from office. Not really, okay, guys? The reason being is because the Republicans own the Senate and the Democrats own the House, okay? And as you can see here, no Republican voted for impeachment, and they vehemently voted against it, but you can see actually some of the Democratic candidates voted against it, okay, guys? So what we can see over here is that Trump has unrelenting support, okay? Trump has unrelenting support from his Senate, and in order to be convicted, he will have to get at least 20% of the votes from the Senate to say, look, we want to boot you out, right? We support the impeachment, and we are going to charge you. Now, based on how the voting went and what's led up to this, I think it's very, very unlikely that he's going to get convicted and charged. Okay, it wasn't like what happened with Richard Nixon, whereby, most of the people in his Senate had lost trust and faith in him. Okay, guys? So it's a very, very different story. So I think it's going to play out just like what happened with Clinton, where he gets acquitted, except for Trump, it's going to be even more so than what happened with Clinton, because Clinton ended up apologizing for, having an affair, apologizing, etc., whereas you got Trump over here going, look, I've done nothing wrong. It's a witch hunt. Like, well, what are these people doing, right? And so he's going to continue spinning that story, and more people are going to believe that he's innocent, and what it's going to create is a massive divide, okay? What it's going to create is a divide between people that hate him and love him. He's very polarizing, and there's sort of very, very little in between, okay, guys? So, part of it is that catalyst. Now, the second part of that catalyst is the fact that based on my research, okay, and I'm not pro-Democrats or Republicans or anything, okay, I'm absolutely neutral, but based on my research, I think that there's a very high likelihood that Trump is going to get re-elected in 2020 for another 4 years, extending his term out to 2024. Okay, and you guys at this point might be thinking, whoa, that's a big call, right? I mean, look at all the media bashing Trump. Nobody likes Trump. Yada, yada, yada. How can you say that, okay, guys? And so what I wanted to do is take you guys through some statistics, okay? I want to take you through some statistics and some facts leading up to today through history, okay? So the first thing that I wanted to take you guys through is, of all of the presidents ever elected in the United States, of all 45 going back to 17, whatever it is, okay, only 10 did not win a second term, okay? So already that's a 22.22% fact that Trump won't win, okay? So almost an 80% likelihood that he will win. And you guys say, well, this is too crude, this calculation. Give us some other facts, okay? Let's look at some other statistics here. Now, let's look at the Moody's calculator, okay? Now, going back to the 1980s, this Moody's calculator and indicator, it's only ever been wrong once, okay, guys? And it's based on these three key factors. We've got the pocketbook model, the stock market model, and the unemployment model, okay? And as long as these things remain positive and people are bullish and people are happy, okay, so whether it's the stock market going to all-time highs, which as you can see here, it's just going up and up and up, unemployment rate, what is it, like 50-year low? Look, guys, this indicator has only been wrong once, and I'm very unlikely to bet against, this indicator, okay? And also, if we actually compare the favorability ratings from when Trump was running in 2016 versus his sort of approval ratings, right, today, you can actually see there's really not too much of a difference. I mean, you can look at, there we go. There's Clinton over here, obviously leading, and approval ratings over here, sorry, favorability ratings, and then you've got, over here the number of don't approve versus approve. You can actually see that his approval ratings have gone up, whereas the disapproval ratings have trended largely sideways. Okay, guys. So you can say, well, let's look at the polls, but I don't know. I mean, the polls. Look at what happened last time. They thought that Trump was going to lose, and he ended up winning. So I don't really think it's that accurate, right? Because different channels conduct different polls. Okay, we've got channels that are anti-Trump that obviously conduct anti-Trump polls. Then you've got pro-Trump polls that conduct pro-Trump polls. So not a very, very good indicator in my opinion. But these two over here, I think these are pretty good indicators, okay? All right, moving on. Finally, guys, what I think we should do is actually take a look at the different sports betting websites, okay? Now, if any of you guys know anything about sports betting, these guys make a living profiting on the odds, all right? Now, have a look at every single sports betting website and have a look at who they have as the overwhelming favorite to win, all right? We've got Trump over here, $1.90, $1.85, $1.91, $1.91, $2.04. His next nearest rival, I mean, Joe Biden, not even close, okay? Bernie Sanders, not even close. I mean, look at Warren. She is the one that's just hammering home this whole anti-private prison thing. She is even further, okay? So she is sort of in 5th place to win the election. And you guys can say, well, these are just sports betting websites. What do they know? Okay, guys, what I do know is that these guys did not get to the size and profitability that they are by making very poor decisions based on bad odds, okay, guys? And it's not just one of them, okay? It's pretty much all of them, all right, guys? So really keep that in mind, okay? Because, I think that these guys have done a lot more research than you and I put together, and they would not be betting on things like this, if they were not at least very confident that their margin of safety is high and the odds of them losing is low. Okay, guys? And that's how they make money. Okay, guys, so I think that I've given you some really strong evidence suggesting that Trump will indeed have a high likelihood to win the election, and now we have the catalyst, which is Trump's 2020 election, and him not being charged but impeached, and him continuing to run for office until the election. Okay, guys? So the catalyst is the next 12 months. Now, the next question you guys might be wondering is, well, what's the price, right? What's it going to go back to, and what's the re-rate? And in order to answer this question, what I wanted to do is to take you through to this really interesting article that I found on Seeking Alpha, okay? Comparing the CoreCivic and Geo Group yields versus the, treasury note, okay, the sort of 10-year bonds, all right? And as you can see over here on the bottom, the heat graph, I think that this is a really, really good indicator of what we can sort of expect if there was a re-rate, okay? And coupling that with what happened in history, which, if you guys remember from the previous sort of drop back when Obama and Clinton and Sally Yates were doing their whole anti-prison campaigns, it dropped down to about the level that it was today, and then it ended up re-rating back up to about the sort of, $28, $29, $30 mark. Now, for the sake of conservatism, I'm targeting a 50 to 60% re-rate, which sort of sees a $25, $26 mark. And if it goes there, I'll probably sell, okay, guys, because, you've collected a 10% dividend, and that, 50, 60, 70% in 1 year, pretty good, okay? I'll take that. But, as you guys can see, it could probably go a little bit higher, okay? So it really just depends on your risk-reward, but I think at these prices, very good risk-reward, because, I mean, if Trump doesn't win and the thing's already gone down 50 to 60%, especially considering what happened last time when it dropped 60% in 3 days and then continued sort of sideways. I think that sort of it's approached a point where it's at core support levels, and it's sort of near that double, triple bottom. Okay, guys, at we're talking sort of maybe another 10% down from here. Okay, so my risk reward is that I think that the downside is about 10 to 20%. Then you take into consideration the 10-12% dividends. So really, you're looking at a sort of 0 to 8% downside if we include the dividends. Whereas if you look at the upside, 50, 60% of a re-rate plus the 10% dividends, I think that the risk reward is heavily weighted in favor of going long on CoreCivic and Geo Group. And I just wanted to sort of summarize this video with a few concluding comments and remarks. Okay, guys? So as you guys can see, based on my research, I think the sell-off is unjustified. There's going to be a demand for these guys' services no matter who's in charge. Obviously a lot more so if Trump's in charge, and sort of less so if the Democrats are in charge. But nevertheless, I think that there's enough evidence to suggest that a total ban on private prisons is unlikely. And the fact that if the worst case scenario does happen, you can see that it's not a total loss. In fact, they'll probably sell their assets for quite a bit and, recoup it, and we'll probably end up at break even, okay, guys? But given that that's not likely, I think the more likely scenario is that Trump will get re-elected for another 4 years. He will continue cracking down on immigration and locking people up, therefore increasing the need for Geo Group and CoreCivic services. We've got a nice double-digit dividend yield, and I think a re-rate will happen after the 2020 election, okay, guys? So there's a lot of catalysts and, some really exciting things happening for these two companies. I've already opened an initial opening position under both companies, okay, but it's only about half of my position, sorry, not even that, maybe a third of my position. So should they go down a bit more, because we've got, I think, we've got at least a few more months to sort of see where the price action goes, and another opportunity to buy in a little bit cheaper. I think that they're going to go sort of sideways until the elections while collecting a nice, like I said, double-digit dividend yield. Okay, guys? Now, guys, just to conclude the video, none of this is financial advice, and, you guys should always do your own research and consult a professional before buying anything, okay, guys, because I'm not a qualified professional. So this is just purely for educational purposes. And that's the end of the video, guys. So look, I hope you enjoyed the video. Hope you learned something from it. And leave a comment if you have any questions. Share the video if you found it useful, and I'll look forward to catching you in the next video. Until next time, happy investing.